Hi there guys, this is Chris Coney speaking, and I just wanted to do a quick bulletin live stream looking at the Bitcoin price because today is my first day back from Mexico, having attended an Acapulco, and I get back to the Bitcoin charts. I have been looking at them. However, if we look at it right now, like look at this. This is today, and then yesterday was when I was flying, traveling for like a full 24 hours. So I saw the chart back here. This is the last time I saw it. Now we'll do a quick zoom in a moment, but this is a break in the recovery. Let's call it that right now. Bitcoin at 9,886. Enough for waffling. Let's talk about the actual chart. So here we go. Zooming in here. What do we see? If I double click to get rid of the volume really quick, we'll come back to the volume in a moment if I remember, because I've not scripted this. I'm literally just doing this off the top so you can see my observations as I make them. Right then, so this might look a little bit messy, but I've got my medium-term trend line here, which if I turn back on the auto zoom and zoom out, you can see how far back this goes. You see it goes right back here to the 15th of September 2017. Little wave up there, another touch around about the, which month is that? Beg your pardon. So that's September the 16th, 15th, and that's November the 12th, right? And then we went boom to 20,000. And then this is where I bought in on the, what's that again? Sorry. It's the American way round of the date. So it's month first, then day. So that is February the 1st. And I missed this move because I bought in here. Because I thought that was going to be a retracement to the trend line, right? Didn't end up happening. But we did then pull back up above it once we hit the 6,000 and we came back above the medium-term trend line. And I thought, okay, now we're back above it. This is a temporary dip. And here we're pulling back to it once again. Now you see where it paused, right? This is the important thing. If I really get into this particular candle, this is like a shooting star pattern, which is technically what it's called. So at the top of a bull run here, you get a big momentum candle like this. You get a sort of, what would you call it? It's just like an inverted hammer at the top of a run, and then a big momentum candle to the downside. So it looks like a shooting star because it's like whoosh, boom. This is generally a bearish reversal pattern, and you can see why it happened. You see this orange, well, it's not orange, it's yellow. This yellow line across here, which is on my chart, it's written at 11,306. It's the 38.2% Fibonacci retracement line, and it's based on the big old crash. So if again, you've got to always zoom in and zoom out to see the detail and the context. So you see this peak at 20,000, and you see a little grey dotted line that goes all the way down here to the bottom at 6,000. That's the line I've drawn, and then these Fibonacci levels have been calculated based on that big move. And you can see that all that data is helping us see where the invisible support and resistance lines are. So this isn't catastrophic. At least I know why this particular point has stopped the price. That 38.2% Fibonacci retracement line at 11,306, that's clearly a hidden line of resistance. So after this nice move up here, boom, we did peak above it. So what was the high of yesterday? 11,788. And then the market doesn't like it. The market does not like that at all, and it's not willing to go above it at this time. What will be interesting, though, is that we've got that as a resistance line, and then we've got this trend line as support. So this candle is still forming, because this is the daily candle, excuse me. And we'll see if by the end of the day, the tail is below it and the body is above it, because that would depict definite support. You see back here, when we went below the medium-term trend line, the white one, you see it kind of acted as resistance. So down here, it came to support, actually broke, and then sort of became resistance, and then broke again here. Kind of interesting. It's a little bit of a shame that we've broken back down below the 50 moving average here, because I thought we were going to be on a run. However, the recovery, I wasn't expecting the recovery to be in a straight line. The price never is. Apart from this, which is how you know something is terribly wrong, it's just a super singular move. Even this bear market we had, it wasn't just in a single move, was it? it was like in waves like this, wave, wave, kind of a recovery, down wave, kind of a recovery wave, down, kind of a recovery wave. So those are the two phases of price cyclicity. So using that same logic, we would expect the same thing in the opposite direction. If we're going to have a recovery here from 6,000, we wouldn't just expect to go way, all the way back up in one single move. We would expect some price cyclicity. So that's what I'm taking this to be right now. You see a little move up here, you see a little move down there, another move up, one move down, one move up, maybe a little move down, maybe medium 10 trend line will provide the support, maybe we'll wave up again, and down again, and up again, down again. I got inspired to draw that, so let's draw it right here. So look, little wave up, little wave down, little wave up, little wave down, bigger wave up. Maybe this is my hope. Wave down back to the medium 10 trend line, move back up. Maybe we'll hit this as resistance, have a little wave down. Maybe we'll hit this as resistance, little wave down. Maybe we'll hit this as a resistance, little way down. You know what I mean? So that would be my hope. That is kind of like the ideal scenario, utopian scenario, to have a little bit of a pause at each of these Fibonacci levels, a slight pullback, and then move on to break it once again. Because once there's been a breath and people have took profit at these various resistance levels, then they can take off again, and all the buyers can come in and push through those lines of resistance. So I've done with that line now, so I'm going to get rid of it. A real key level to look at as we recover here would be this one. This was where there was kind of a fake recovery back towards the 20,000 mark, and it just didn't happen, did it? This was mad price volatility, stopped here at about 17,000 it was, and then just fell terribly. So this would be a real, I'll call it a danger zone, I think. This is a danger zone as we recover, because this is only the second time ever that the price has been around 17,000. So a lot of traders will be looking at this, in my opinion, when it gets back there, and may be a lot of profit taking around this level because there'll be fear that we won't break it again. So erring on the side of caution, a lot of traders are going to take profit around 17,000, in my opinion, because they'll see this and they'll go, not willing to chance it. The riskier traders will just hold there or even buy there to try and push the price to 20,000 and beyond. And then when it gets back to 20,000, you're definitely going to see some profit taking going on, because again, it'll only be the second time the price has ever been at 20,000. So the trader's going to be like, I'm going to be getting some while the getting's good. Even as I'm speaking to you right now, we're back at 10,000. The battle for 10,000 is back. And look at what's happening to the medium-term trend line here. This is what I was thinking may happen. If I wave my mouse over the medium-term trend line as it is right now, the price read is about $10,021, give or take. I mean, we can go to the 1 hour chart to get a more precise reading on this, which is the benefit of the lower time periods. So right now, if we wave over here, 10,047 on the 1 hour, if we're really, really precise about it. But actually, when you look at it from this point of view, we're actually below the medium-term trend line, which it looks a lot flatter, doesn't it, on the hour chart versus the daily chart. So this is what it looks like on the daily. It looks a lot steeper, but when you break that candle into 1 hour candles, we see this, right? So we're below the medium-term trend line right now, broke back down below it, what was it, 3 hours ago? Yep, 3 candles, 3 hours ago, about 12 noon GMT, broke down below it. And now sort of this is looking pretty good. You see these lows are being rejected, even though they're lower lows. The price keeps going up to the upper half of the candle, and this is a reasonably good momentum candle right now. The body is almost the entire candle, although now it's got a head on it, so that's bearish. And again, you have to take all of this not individually. You can't take it individually. You have to look at all the individual candle signals and then kind of aggregate them all together in a soup, and then determine what's the overall, not consensus of the market, the overall, can't find the word I'm looking for, but you know what I mean, the overall feel of the market as a whole. What I do notice here on the 1 hour chart though is some really nice, I say nice, it's not nice because it's going down, but I mean nice in terms of technically perfect price action in a bearish direction. So getting my paintbrush out again, price cyclicity to the downside. There's a move down there, phase 1, phase 2, phase 1, phase 2, phase 1. So this is a really nice downtrend, and we could probably line this out as well. Not really. You can see it bouncing off the 50 period moving average. A breakdown below there acted as resistance. It pulled away from the red line, which is the 50 period exponential moving average, pulled back again, acted as resistance again, down we jolly well go. So not looking terribly good on the 1 hour chart right now, to be perfectly honest with you. So in a bearish direction on the 1 hour, and I'm hoping that this medium-term trend line will act as support if this can pull back above it in the next few hours. So I'm done with that that brush line for now. I'm going to return to the 1 hour chart, and this is where we're at. It looks a lot better from this point of view. On the longer term, it's still, you know, in a downward direction. We'd have to clear this sort of area first. And I've already bought in, so I'm not saying wait until it gets to 20,000 before you buy. I've already gone in about here, you know, when it gets to about 9,000, and when I was erring on the probability that this medium-term trend line was going to be support. So I lost this area here, but I'm back in profit now. Not a lot though, given it's pulling back. But those are my thoughts off the top of my head right now. You'll have to pick out the details there, because I didn't actually make any notes on that. I was literally reading it as I saw it, and I think that's more raw. You know what I mean? It's the first thing I noticed, because if you overthink chart analysis, you'll start seeing things, right? So the instantaneous things that I saw, the most obvious things that I saw, are the things that I've just shared with you. So go back through this recording of this quick live stream and see what you can pick out from that. So that's all for now, guys. So until the next time, it's me, Chris Coney, saying bye for now.